Your ego is why you're still unprofitable. It's why you refuse to take small losses, why you move stops, why you hold losers just to avoid admitting you were wrong. Unseasoned traders don't trade the market, they trade their pride. And the market collects that ego tax every single time. If trading feels like a constant battle between what you know you should do and what you actually do, this conversation is for you. Many traders struggle not because they lack knowledge, but because their ego quietly interferes at the worst moments, refusing to take losses, needing to be right, and reacting emotionally when the market doesn't cooperate. This internal conflict shows up as hesitation, overtrading, and self sabotage, leaving you frustrated and confused about why profitability feels just out of reach. Today, we're addressing how ego operates beneath the surface of your decisions and why recognizing it is the first step toward real consistency. The ego, however, is not who you really are. The ego is your self-image. It is your social mask. It is the role you are playing. Deepak Chopra. Most traders never realize when ego has taken the wheel because it doesn't show up as arrogance. It shows up as justification. It sounds like confidence. It feels like conviction. But underneath, it is a quiet resistance to being wrong, to sitting with discomfort, to accepting feedback from the market without taking it personally. Ego convinces you that rules are flexible, that this trade is different, and that losses are something to argue with instead of respect. And until that pattern is named, it quietly shapes every decision you make, keeping you busy, frustrated, and wondering why effort isn't translating into profitability. When you stay in a losing trade past your rules, it rarely starts as reckless. It usually begins as a quiet internal negotiation. Oh, it's probably just a pullback. Or, let me give it a little bit more room to grow. Even when price clearly invalidates your setup, exiting feels heavier than it should. That's because closing the trade isn't just a final decision. It feels like a statement about you. Being wrong feels personal, so you delay the exit, hoping the market will turn and spare you the discomfort. Over time, this pattern teaches your brain a dangerous lesson that protecting your identity matters more than protecting your capital. Small, planned losses turn into larger ones, not because the market was unpredictable, but because ego needed reassurance. Profitability requires neutrality, but needing to be right keeps you emotionally entangled. The market doesn't care about your intentions or your intelligence, and the sooner you accept that, the easier it becomes to exit when the trade no longer makes sense. And when being wrong feels this threatening, it doesn't stop at holding losers. That discomfort follows you into how you manage risk itself. You place a stop loss with clarity and confidence until price starts moving toward it. Suddenly, the stop feels too tight. Your chest tightens and the urge to adjust it creeps in. You tell yourself you're being flexible or giving the trade room, but the truth is simpler. Being stopped out feels like rejection. Moving the stop becomes a way to delay that feeling, even if it increases risks. The long-term damage here isn't just financial, it's psychological. Each time you move a stop, you teach yourself that rules are negotiable under pressure. Trust in your process erodes, and trading becomes emotionally unsafe. Instead of the stop protecting you, it becomes a moving target shaped by fear. Over time, this conditions you to avoid accountability rather than build discipline, making consistency nearly impossible. And when rules start to feel optional, another pattern often shows up. One that looks like confidence on the surface, but is driven by something much deeper. After a loss, it's not just the money that stings, it's the doubt. You feel exposed, like the loss says something about your ability. That discomfort creates urgency. You want another trade quickly, not because the setup is there, but because you want relief. You want to prove to yourself or others that you know what you're doing. So you click faster, loosen criteria, and call it confidence. But the energy behind those trades isn't clarity, it's wounded pride. Overtrading in that state isn't about opportunity, it's about repairing self-damage. The market doesn't respond to that motivation kindly. Instead of restoring confidence, it often compounds losses, reinforcing the very doubt you were trying to escape. True confidence shows up as restraint, not speed. But ego pushes you to act when patience would serve you better. When this cycle repeats, frustration builds. And rather than slowing down to understand what's happening, many traders turn away from the very feedback that could help them grow. When ego is in control, losses feel like accusations rather than information. Reviewing a losing trade feels uncomfortable, so you look outward for explanations. Bad timing, unexpected news, manipulation, or someone else's fault. These explanations offer temporary emotional relief, but they block learning. If the problem is always external, there's nothing for you to adjust internally. This pattern keeps you stuck. The market is constantly offering feedback, but ego filters out anything that threatens your self-image. Growth requires humility, the willingness to say there's something here for me to learn. Without that openness, the same mistakes repeat under different conditions. Profitability doesn't come from being flawless. It comes from listening carefully when the market responds. What we often label as ego in trading is, at its root, an ancient survival response. Your brain evolved to protect you from threat, not to optimize risk-reward ratios. When a trade goes against you, the nervous system interprets it as danger. Status threat, loss threat, survival threat. Ego steps in as armor. It says, don't be wrong, don't look foolish, don't lose ground. In early human history, appearing weak or wrong could cost safety, resources, or belonging. So holding a losing trade or avoiding a stop isn't stupidity. It's a body trying to survive.
Pause. Before you scroll, before you open another chart, before you take the next trade, just pause for one moment. And first, I want to genuinely thank you for watching this channel. Because if you're here, chances are you're trying to figure this market out. And that alone takes courage. Trading is exciting when it's working, but when it's not, it can feel frustrating, confusing, and even a little defeating. You study indicators, you watch videos, you try to follow strategies, but somehow the market still moves in ways that leave you thinking, why did it reverse right after I entered? Why does it hit my stop and then go exactly where I thought it would? Well, let me say something that many trading channels won't tell you. Most traders aren't struggling because they lack intelligence. They're struggling because they're trying to trade without clear levels and structure. They're reacting emotionally instead of preparing strategically. That's exactly why I created our free trading community. Inside the group, I share the exact SPY levels I'm watching for the next trading day, the areas where the market is most likely to react. These levels give you something every trader needs but rarely has: clarity. Instead of guessing, you're prepared. Instead of chasing, you're patient. Instead of trading fearfully, you're trading with structure. And the best part, it's completely free. So if you want access to tomorrow's SPY levels and a community of traders learning to approach the market with discipline and confidence, join the free group in the description below. Then come back here and comment levels so I can personally welcome you into the community. You don't have to navigate the market alone. Let's trade with clarity.
Transformation begins when you realize protection is no longer required in the same way. The market is not a predator. Being wrong does not threaten your survival. When you consciously separate modern risk from ancient threat, your body can relax. Ego loosens when safety is restored, and safety is restored through structure, small risk, and repetition. You're not here to prove strength. You're here to price regulation, and regulation is the new edge. Once you understand that ego is trying to protect you, not sabotage you, it becomes possible to look deeper at what it's protecting. Psychologically, ego interference happens when trading outcomes become tied to self-worth. A winning trade feels like validation. A losing trade feels like exposure. In that dynamic, exiting a trade or accepting a loss isn't just a decision. It feels like a judgment about who you are. Ego rushes in to protect the self-image, convincing you to rationalize, delay, or override rules. This is why intelligent traders still self-sabotage under pressure. The shift happens when you uncouple identity from outcome. You begin to see trades as behaviors, not verdicts. Profits and loss become feedback, not personal commentary. When your worth is no longer on the line, clarity returns. Ego quiets not because it's defeated, but because it's no longer needed. Self-trust grows when you follow your process, even on losing days. That trust is what stabilizes performance over time. But identity doesn't form in isolation. The way we experience being right or wrong is shaped by history long before we ever place a trade. For many in the Black community, ego-driven behavior in trading cannot be separated from history. For generations, appearing wrong, weak, or incompetent carried real consequences: loss of safety, dignity, livelihood, even life. From slavery through Jim Crow and beyond, survival often depended on strength, composure, and avoiding anything that could be used against you. Emotional restraint and image protection were not vanity. They were survival strategies. That history doesn't disappear when you sit at a trading desk. It shows up as a pressure to be right, fear of visible mistakes, and resistance to taking losses. Ego becomes a shield shaped by collective memory. Transformation begins when you recognize that the market is not a courtroom or a plantation. It is a learning environment. You are allowed to make mistakes here without punishment. Letting go of ego in trading is not weakness. It is a radical act of freedom, choosing growth over survival conditioning. When the burden is acknowledged and released, the final layer reveals itself. What you rely on when control is no longer possible. From a faith perspective, ego often emerges when trust is lacking. When outcomes feel uncertain, the urge to control intensifies. Ego says, I have to make this work. I can't afford to fail. But faith has never been about control. It has always been about obedience, surrender, and trust beyond visible outcomes. Ego interferes when responsibility for results replaces faithfulness to the process. Transformation occurs when you release the burden of outcome and return to stewardship. Your role is preparation, discipline, and integrity, not perfection. Losses do not signal abandonment. They are part of refinement. When you trade from faith, ego steps aside because it no longer needs to protect you. Peace replaces urgency. Patience replaces force. And trading becomes not a test of pride, but a practice of trust. You don't have to conquer your ego to become a better trader. You have to understand it. The patterns you've been living with didn't come out of nowhere. They were formed to protect you, to help you survive uncertainty, pressure, and past experiences. When you see that, the struggle softens and growth becomes possible without force or shame. Trading gets easier the moment you stop fighting yourself and start listening to what your reactions are telling you. Fear, hesitation, and ego are not enemies. They are signals. And once you learn how to read those signals, they stop running the show. Clarity doesn't come from being tougher. It comes from being more aware. You are allowed to learn in public with yourself. You are allowed to take losses without turning them into a story about your worth. Every professional trader you admire has walked through this same territory, learning how to separate emotion from execution and identity from outcome. The difference is not talent, it's regulation. This work is not about becoming fearless or perfect. It's about becoming steady. Steadiness is what allows you to follow rules when it's uncomfortable, to step back when emotions rise, and to stay present instead of reactive. That steadiness is a skill, and like any skill, it can be trained. You don't have to rush this process. Transformation in trading happens through small, repeated shifts that compound over time. Each moment you pause instead of react, each time you honor your plan, you're building something far more valuable than a single win. You're building self-trust. To support you in going deeper, I've created a free resource guide designed to help you explore these concepts with structure and compassion. It's meant to be used alongside your trading at your own pace as a way to connect insight to action without overwhelm. If this message resonated, I invite you to download the free guide using the link below. Let it be a companion as you continue growing, not just as a trader, but as someone learning how to operate from clarity instead of pressure. You don't have to do this alone. This isn't about beating each other. It's about building together. If this resonated, leave a comment and be part of the conversation. Like it so the message travels, and share it to help level the playing field for Black families learning to grow wealth with intention. You've got this. Peace and blessings, Dr. O.